Let's stay with the local share market. And earlier today, I spoke with Marcus Padley from Patersons Securities. Well, Marcus Padley, the name Houdini comes to mind. How on earth did the local share market come back from a 5% drop?
Yep, down 5.5% to be up 1.2%, so 7.7%. And Tiki, some of these banks, like the NAB, for instance, were up 8.9% from the low, and most of the others sort of 8.5%, 7.5% up. There are all sorts of excuses. I liked one of the market reports which said traders are baffled, and as I sit here, we are a bit baffled. There was all sorts of talk about the future fund buying, about the fact that the domestic banks here have dropped interest rates.
Well, yes, it does smack of some sort of coordinated intervention, really.
Yeah, if you look at Shanghai, it was down 3.5%, and as I'm speaking, it's up. So it's a sort of international thing. I don't think it's anything to do with a future fund, anything to do with domestic banks and interest rates. It's to do with maybe expectations of quantitative easing. It may just be all the big institutions, or not the big institutions, but all the international institutions mucking about in the futures market and in our market, which is why all the big stocks are the ones on the move rather than sort of everything.
Well, how damaging to investor sentiment is all this volatility, do you think?
Very. I think it's going beyond, sort of temporary damage to quite long-term damage, really. People will be thinking about term deposits, whether equities are worth it. You know, in a few months, we've been down 25% from top to bottom. And even if we do see a relief rally, it's no real solace if tomorrow we could be down 5% again.
Down at the retail level, are you seeing any buy recommendations beginning to happen?
Look, it is in the nature of our industry, Tiki, for brokers and commentators to come out with whole lists of buy recommendations at this stage in the game, in this sort of Buffett-esque, isn't it clever to be buying everything whilst the prices are down. But the truth of the matter is that you've got to ask, is the foundation for a longer-term bull market here? My interpretation would be, with the US government's credibility shot, with their only option at the moment to borrow more money, with Europe singularly failing to instill any confidence, and Spain and Italy yet to become a problem, too big to bail. This is not the foundation for a long-term bull market.
Well, let me ask you the flip side of that question. Do you see this as the beginning of a global financial crisis Mark II?
No, I see this as a continuation of the first global financial crisis, which is clearly going to take years to sort out, and this is not a GFC2 that is going to be sorted out. This is a systemic problem that's been around now for years, and there's no quick solution in my mind.
Marcus Padley, good to talk to you as always.
Sort of good, Tiki, yes.